This week's big headline was the signature of the first U.S.-China trade agreement, but it was factored in and made no major waves on markets. However, U.S. banks kicked off the fourth quarter earnings season with very pleasant surprises. As well as strong contributions from trading, credit card spending also performed very well. Household spending was also underpinned by further improvements in the labor force participation rate in the U.S. and elsewhere in the world. Further positive signs for the U.S. economy came from Delta Airlines, which saw domestic flights rise 7.7% and high spending on corporate advertising. This should reassure investors, who will be paying particular attention to results this year, as 2019 was essentially driven by central bank support and multiple expansion. It was a good week in Europe, where equities gained 1% on the back of the signature of the U.S.-China Phase 1 trade deal. Airbus, still riding on strong sales momentum, announced an order from China Aircraft Leasing for 40 A321neo planes. Xavier Niel's buyback tender for some of Iliad's shares was 100% covered, and he now has 72%. The stock rose 4% over the week. Switzerland's Richemont reported a 4% rise in quarterly sales. Strong performance in China and South Korea more than offset weakness in Hong Kong. The stock jumped 6% on the news. HelloFresh meal kit home deliveries soared 15% after announcing a 36% rise in annual sales and doubling its margin guidance. Rio Tinto also reported good news, reassuring investors on production momentum in Australia and confirming that it had resolved operating problems that had hit iron ore output. In France, Alstom said it had taken in 3.6 billion euros in new orders in the last quarter, a sign of its strong sales momentum. As of end December, the order book was at a record 43 billion euros, or the equivalent of 5 years of sales. The railway sector is growing, partly because of environmental concerns. The first negative effects of France's strike in December have filtered through to retail groups. Over the week, FNAC Darty and Casino both made profit warnings, with sales shortfalls estimated at 70 million and 80 million euros, respectively. U.S. markets pushed to fresh records, with the S&P 500 up 1.1% to 3,300 and the Nasdaq 1.5% higher. Events in the Middle East failed to impact indices. For the first 2 weeks of 2020, market leadership was clearly in growth defensive camp. After chalking up close to 50% gains in 2019, technology added another 5%. In defensives, utilities advanced by more than 3%. In contrast, value stocks once again struggled over the week, with energy down 1% and financials stable despite upbeat quarterly figures. U.S. banks posted sharply higher results on strong consumer lending and surprisingly good performance overall from trading and fixed income compared to the previous year. XPO Logistics jumped 10% over the week after the company said it was looking at selling parts of the group, a move that could reduce the stock's discount. In distribution, Target fell short of expectations, with only a modest 1% rise in sales due to disappointing performance in sales of electronic products and toys. Elsewhere, Bombardier saw heavy selling after cash flow in the fourth quarter came in at $1 billion, or much lower than the $1.6 billion expected. Google has just joined Apple and Microsoft in the exclusive club of companies capitalizing more than $1 trillion. Japanese stocks dipped after the U.S.-China Phase 1 trade agreement was signed and U.S.-Iran tensions abated. The Topix edged down 0.37% for the week. Iron and steel and pharmaceuticals outperformed the market, while mining and oil and coal products underperformed significantly. Oil and gas developer INPEX fell in line with retreating oil prices. Although there was good news in the shape of an 18% rebound in private sector machinery orders in November, it had little impact on the sector. The BOJ's purchases of JGBs in 2019 was modest compared to its soft target of an 80 trillion yen increase in the balance held per annum. The net increase in the balance of its long bond holdings was only 16 trillion yen due to its monetary policy target shifting to yield control. Emerging markets were up 0.2% this week as of Thursday. China and the U.S. signed the first phase 1 of trade deals between the two countries. The deal commits China to do more on intellectual property protection and outlines a $200 billion list of U.S. goods and services China will have to buy to reduce its trade imbalance with the U.S. Meanwhile, the U.S. will lower some of the trade tariffs that have been introduced in the past 18 months. China was also removed from the list of U.S. currency manipulators ahead of the signing. China's GDP grew 6% year over year in the fourth quarter of 2019, bringing GDP growth to 6.1% for the full year. Exports and imports surprised on the upside in December, with respective growth of 7.6% and 16.3% year over year, with the improvement in exports led by the European Union and Asia ex-Japan. Personal vehicle sales were down 0.9% year over year in December. For 2019, PV sales were down 9.6% year over year. SAIC reported 2019 preliminary net profit down 29% year over year, or 15% below consensus. The government announced a stabilization of electric vehicle subsidies. Russia's government announced it was resigning. Mikhail Mishustin will replace Dmitry Medvedev as prime minister. Vladimir Putin also proposed constitutional amendments that would strengthen the powers of the parliament at the expense of the presidency. And that's all for today. Thank you for watching. Subscribe to our channel to track the market pulse and get the latest economic data. Good luck trading.